I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Wednesday, August 18th. We've got three markets for you today: corn, soybeans, and going to wrap things up with live cattle. Before we get into that, though, I do want to remind you that we do have a Facebook Ag group, Ag Chat Without the BS, for hedgers and traders. Know there's a lot of other agricultural Facebook groups out there. This one is, I think, a lot less cluttered and a lot more informational for the users, and we'd love to have you join if you haven't already. We will be sending out some free swag by the end of the week, free Blue Line gear to a couple random members in that group. So if you haven't checked it out already, be sure to head over to Facebook Ag Chat Without the BS for hedgers and traders group and join. We'd love to have you join the discourse in a positive light. So without further ado, we'll kick things off here with the corn chart. It was a relatively quiet day. Very light volume and not a lot to really change the technical landscape. We're really treading on the breakout point from last Thursday's USDA report, and this was the top end of the range for several weeks, and so previous resistance now becomes support, significant support. 560 area is the level that we're keeping a close eye on, and break and close below there could potentially spur some long liquidation and take us back towards that 100-day moving average here at the blue line, which comes in a little bit closer to 550. If the bulls can defend this, I think they have a little bit of a technical advantage, but again, a break and close below that I think would spark some pressure. The other caution flag for us here in the near term is the fact that we've gotten a string of bullish news here over the last week, and the market really hasn't been able to respond accordingly. So if you get bullish news and the market can't rally on that, it definitely sends some caution signals out there. So we continue to lean a little bit on the sell side with clients, especially producers who are looking to just protect price and keep a floor in the market. That's very important to do. It's often easy to get caught up in the hopium and the hope that futures just continue to rally forever. But we all know that all good things must come to an end, and it's important to make sure that you're in business the next day as a producer. So hedging strategies have been plentiful here recently, especially with the volatility shriveling up a little bit. There's some good prices out there in the options markets. Moving over to the soybean market, a little bit different of a story. We've bumped up against technical resistance there from the end of June, failed to get out above there. That was up at 1380, and now we're retreating back to the 100-day moving average, which prior to last week's USDA report was a magnet for the market, and it looks like it's going to be a magnet for the market again. That comes in at about 1346 3/4. If we break and close below there, there's a nice trend line that comes in all the way from these November lows, and that comes in a little bit closer towards the 1330 level. But really, if we break and close below the 100-day moving average, we wouldn't be surprised to see a little bit more pressure towards this psychologically and technically significant $13 level. This was support back in July as well as the beginning of August. So break below this trend line and the 100-day moving average opens the door for a retest of $13. On the flip side, if you're bullish, you really want to see a conviction close out above 1380. That would open the door for a run back above the psychologically and technically significant $14 handle. And kind of as mentioned with corn, there's been some decent news out there recently. We've had 10 consecutive days of flash sales, which should be supportive to the market, but we're really not getting much going there. We need to see bigger and bolder export sales to really get this market moving north again. So that's what we're looking at in the grain markets. Wrapping things up in the live cattle section, really just mostly range bound here. We're at the top end of the range in a seasonally weak time of year, so we continue to like selling towards the top end of the range, and that's basically anything from 129 to 130. As far as what we're looking for, we're not, just because we're on the sell side or leaning on the bear side of things, it doesn't mean that we're looking for the bottom to fall out of things and we're going to go back to 115. No, we're just looking for a little bit of a range bound trade back towards the low end, which comes in a little bit closer towards 127. One thing to note, that the outside markets did soften up quite a bit here in the afternoon. If that continues in the overnight session and into early tomorrow morning, that could potentially spill into a risk-off trade in commodities, and that could certainly mean live cattle and feeder cattle as well. So it's something to keep a close eye on there heading into tomorrow's session. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.